What's happening, y'all? We back. I'm on gold, doing my pre-market analysis or market analysis because the market actually started moving this evening at 6. But I'm just kind of observing it on Sundays. I'm not trading. I learned my lesson kind of jumping in too quick. Now I just use Sunday to see what's setting up, what's happening in the charts, and also to look at some of my fundamentals. We've been focusing on a lot of chart work, on a lot of the technical aspects of trading, candlestick levels and things of that nature, using the Fibonacci, using trend lines. Now, I want to just touch a little bit on the fundamental analysis, which is the news or global events behind how an asset or that can affect the asset's movement on the chart. Um, and gold, it fell below 2,000 an ounce this past Monday after jumping up to well over 2150. And one of those reasons is because investors are a little cautious ahead of a lot of news that will be coming out this week, monetary policy decisions being made by our Federal Reserve, the European Central Bank, and the Bank of England, as well as some other data that will be coming out, jobs numbers, job expectations, and things of that nature. So that's just a little bit touching on some of the fundamental things you want to look at to form a fundamental analysis to partner with your technical analysis to give you a better chance at forming the right directional bias on whatever asset you're trading. All right, on to the chart. Now I know I have a lot of lines on my chart, and I'm just going to give you a brief breakdown on what everything is. All right, I've got a little key over here. The red line, if you see a red line, that's a key weekly level. That means there are certain levels each week that are vital. That may be touched by the price of gold. So I have that on my chart. Uh, this yellow line, the yellow lines are key hourly levels. The green lines, these light green lines going across are key daily levels. And then these purple lines going across are key 4 hour levels. So I keep up with 4 hour, daily, hourly, and weekly levels. And instead of having to look back in time, I just create a line for those levels so I can see where they are as it relates to current price and current price action. Uh, and one of the things I use some of these levels to determine is where price might go next. Because generally, an asset, when it retraces itself, it'll touch a lot of those same levels. Like you see, I've got this key hourly level here, and you see how price pushes above and below it and kind of consolidates in that level before it makes a move. Same thing here. This hourly level, price is consolidating right there before it made a move down. Right here, price was consolidating at this key hourly level before it made a move up, and so on and so forth. You can see at each point on the chart, price was, found support here at this key hourly level, pushed up to this next hourly level, and then pushed back down, found support again, found resistance here. So as you can see, I know it may look confusing, and generally I'll take it off of my charts once I start trading because I like my charts to be kind of clean. But when I'm doing my analysis, I like to have those levels so I can have an idea of how price is moving, how it's moved historically, and how it may move in the future. All right. Now, this is where price currently is. Price is currently around 1999.05. And you see I have this red line showing, this red ray showing that price may push down, reject off this hourly level, retrace, and then go down and push for a further down move. Or if price continues up, it's probably going to hit off this key level or this fib level and then reject and then push back up for a deeper retracement. But I'm generally feeling that price is eventually going to still move down. It just, is it going to occur in a shorter span, or is it going to move up first, get rejected, and then push downward? And we have these levels set so that it will give us a clue. Say if price goes here, and then I see it start to push up, and then I see it start to form a candle and close at this level. I may think, okay, price is going to continue to move down, especially if it opens up, with a red candle or with a strong push. And the same thing, vice versa on the up move. And I know these seem like small moves, but I want you all to understand, I'm going to stretch this chart out so you can see this area where price is. Even this move right here, if you just caught this move from here, from this key 4-hour level down to this hourly level, or it's actually 0.618 on the Fib chart. I know we talked about the golden ratio in Fibonacci. I've also got a Fibonacci chart on here. So that's a very strong level. If price just made that one move, you're talking about over $1,700. So we don't have to catch the whole move on an asset. We don't have to catch it from up here and watch it fall all the way down. You can just catch pieces of a move. Even if you just, caught this part of the move from, price rejects, pushes up. Price, comes down, rejects off this hourly level, pushes up and rejects off this 4-hour level, and just pushes back down to here, just retraces back down to this hourly level. That's $603. So what we got to learn to do is not be greedy, do our analysis, and then find those spaces or those intervals where we can get in and just catch a part of a move. Just take what the market gives us. Don't be greedy and say, oh man, it's gonna go up here, and then I'm just gonna wait, man, and catch this whole. No. Shoot, if you see that price has retraced, the price decides to go up and hits this 0.236 on the Fibonacci, or lands anywhere in this area between that Fibonacci and that key hourly level, and then starts to push back down, you can just catch a piece of that move. Say you saw it starting to reverse, and you just wanted to catch a piece of that move right there. Just that, 60% of that reversal right there is $429. So, trading these assets can be very lucrative. And, where you find where you can make $429 in 15, 20 minutes, 30 minutes, an hour. It's generally not happening, but you can do it in the markets. And then don't be greedy. Don't be like, well, I'm just going to wait for it to make the move up, and I'm going to wait for it to make the move down. Find a flow, catch it in its motion, following along with the trend. If it's on a downtrend, as it is right now, price is on a short-term downtrend. Catch that down move and get paid and be satisfied with it. So I just wanted to come on and talk a little bit about what these lines mean. When you see them on my chart, it's part of my analysis. It's part of my historical analysis of price and price action on that particular asset. And each level is based on a time period. Because I have learned from ICT concepts, which I like to give credit where it comes from and credit where it's due. Shout out ICT. When he talks about price and time, or time and price in the chart being very important, they are time and price. So it's just a little bit of analysis. Another part I know you see at the bottom, you see this says sell side liquidity, and this says buy side liquidity. Briefly, what that is, if you look here, this strong blue line that I have. Hold on, let me delete this one so it won't be confusing for you. This strong blue line that I have going across the chart, I set a fib on the chart and looked at, for this particular area, 50% of the move up, and the top part of the chart, and 50% of the bottom part of half of the chart. That 50-50 is premium and discount. The top half is considered premium, premium pricing, and the bottom half under this blue line is considered discount. The reason I split it like that is because when the price moves above this blue line in this particular section of pricing, I consider that premium. And we're going up here, we're looking to sell. And when price starts, or we're looking for definitely sales as price gets to the peak. And when price starts to fall and gets down here to sell side, or this bottom, you can see right here, this is where it bottom, you're looking to buy. You're looking to buy cheap, sell high. Buy cheap, sell high. So that's another aspect of the chart. And the reason why I have this line right here kind of demarcating what is the premium half of the chart and what is the discount half. Another way you can do it if the lines are confusing is just take a rectangle, make it something more opaque, and then same thing on the bottom half of the chart. Take a rectangle, this thing's acting funny. To mark out your discount side and just make it a little bit of a different hue, color. Now you see premium. This is the premium half of the chart. This is the discount half. You're looking to, of course, be selling on the way down. But when you get to the bottom, you want to be buying. You want to be buying here. And as price, moves up and gets into the premium side, you want to be selling. You want to be taking your profit. Same thing. You're selling here on the premium side. As price falls, you're selling, and when price gets down in here, you want to be buying. Price gets here and finds a reversal. If it continues to fall, continue to sell. But if it gets to this base, to where you get to where you feel like you're at the outer end of this liquidity and you're at a key level and price shows you a reversal pattern, you want to start looking at buying up into this premium level. So that's just a little bit of an explanation, a breakdown of my chart when I'm doing analysis. Some of the things I'm looking at, you can see my bias for the week or my bias to start the week. I think the price is generally going to continue to fall on gold. A couple weeks ago, I said it was going to go up. It was going to get up over 2,100. It did, and you see there's a strong rejection. It got up to 2,150, and then there's a very strong rejection. It doesn't want to go any higher right now. And you see it fell steeply, start consolidating. It fell again. Now it's consolidating again, and it's consolidating along what looks like to me a selling path. It'll consolidate here, fall to another area. Even if it does a brief retracement, it's going to continue to fall. And I think eventually it's going to get down to, back into the 1930s, and then it may retrace again, push up, and then fall down into the 1800s. So that's why I think gold is going in the short term. It may take it a couple weeks to do that or more. I'm not going to try to pick a top or pick a bottom because no one can really tell you exactly what price is going to do. All we can do is perform our analysis and use that to our best judgment to form a bias as to what we think price action is going to go. So I'm done talking. I know I talked a lot. This is the longest video I've ever done, and it's actually helping me as much as it's helping you, because the more I break it down and talk about it, it just further ingrains it into my mind, and it sticks more, and I just get deeper into my abilities to really analyze and break things down. So let's continue to learn more about trading. Let's continue to dive into the markets, and let's be profitable. Let's end 2023 on a very positive note and bring 2024 in with a bang. All right, y'all. I'm out. Peace and love.